Good morning. Welcome to Traders Workshop. Today is Thursday. We are live, and we will be discussing bot-driven profits, zero DTE iron condors, and the trading setup, among a few other things. So let's get right to it after the bell. I need more. Damn, I need more cowbell. More cowbell. Son of a bitch. What's up, boys?
Love it. Love the intro. I think it needs to scale up at the end instead of scale out at the end.
Yeah, something.
That's a good idea. Note to self. We'll fix that. We'll fix that. Sorry we're late. Good morning. I'm a little bit out of it, even though I haven't had a cocktail all week. Pretty impressive. So that's good news. No wine either, Mark. So just straight, no booze.
Wow, good for you.
Yeah, I'm trying to give up Monday through Wednesday. I usually get through about a third of that every week.
So what's on deck tonight?
Today I've got a little golf outing with some buds from the southern part of town. So we're playing a little big golf match today. So there will be a little cocktail in the day today. So, yeah. Anyway.
Good luck.
Thank you. All right. Good to see you as always. Let's get to it. Oh, I noticed I have my stuff open. So Mark, I think this is kind of your topic a little bit, right? So bot-driven profits. I think you're getting into the bot world a little bit. We don't, you can choose whether to talk about that at all. But what are we talking about here? What are you noticing?
Yeah, you're right. That I have been dabbling quite a bit in the bot world, and I've been working with some friends of yours on that, some friends of Tradiers on that, with the Peak Bot folks. That I've been loving their Iron Condor strategy specifically recently, and it has made me a convert on zero DTEs.
Oh my God! Wait, let me ring the bell. That's amazing. You just said that. I've been telling you that for months, and you're just getting there.
Maybe even years. We might have had zero DTEs for years.
Well, we have had it for years, but in a different kind of. It was a little quasi crypto. Wow, that's a big revelation. So, tell us, please.
I think it's one of the perfect places for systematic bot-driven trading, right? That like capture an opportunity. Close out, systematic rules about when you close, what your levels are, what your risk management is. I think that combined with I think there's a little bit of extra sauce that you need. You have to be turning it on and off in the right places. You can't always smash a condor, but most of the time you can. And when you do, a bot is the best way to do it.
Now, why do you say a bot's the best way to do it? Because sometimes I feel like I'm bot-like as a human. Sometimes.
Many people would agree with that, but even you can't necessarily be there to close every leg of that spread, right?
100%.
One of the things I love about this feature one of the features of the bots that I've been using is that it closes one leg at a time. So in a lot of these reversal days, you'll buy in your short call spread, and then the market will rally, and you'll buy in your short put spread. So getting out of them more deftly and always having that sort of nickel bid out there or whatever it might be to close lets you, capture some of the swings of it.
Interesting.
Close even when you might have had a loser. I mean, I've had days like that too.
Yeah, that's interesting. So how do you get to the point of knowing when to take off one of the legs or the whole thing? What is the trade plan that tips you off to do that? And I know it's automated, I get it, but you still as a human have to tell the machine, hey, here's when I want to get out of the put spread, here's when I want to get out of the call spread, or here's when I want to get out of the whole goddamn thing.
So usually I sort of start with the baseline settings are you put out some nickel bids in the morning. And hopefully you can get closed for a nickel. Sometimes you open on the open and you end up paying 4 cents for something that quickly goes to 2 cents. But at the end of the day, closing that for a nickel is most of the time a win. I think you gain a lot more, paying quote unquote up for that to close.
So you're closing out the short legs for a nickel, leaving the long lotto tickets out there if you can.
Well, no, it closed the whole spread.
I got you. Okay, the whole spread. Got it.
Yeah.
Okay.
So if the whole spread's at a nickel, boom, get rid of it. The call spread or the put spread, I mean, not the whole Condor spread, right?
Got it.
You get your call spread at a nickel, and you independently get your put spread at a nickel.
Okay.
So those are sort of the baseline assumptions. Where I will tend to come in and override it is if we have a big down day, right? And it's blowing through, and you're short this put spread, and it's trading. It's $3, $4 in the money, 40 SPU points in the money. Your $5 wide spread is trading at like 80 cents.
Okay.
10 o'clock.
Yep.
Do you just take it? Do you just take the 80 cents? Do I take 80 cents now, or do I, you're selling the call spread, right? Like, are you selling that call spread at 20 cents? Sometimes, yes. We're down today. 80 cents is better than $1.
Yeah.
An out stop loss.
So just so we're clear on this, because we might have some beginners who aren't following this. So you have your iron condor, you're short a put spread, you're short a call spread, right? And you probably put this thing on with the cash price in the middle of those two things, somewhat in the middle. You might lean it one way or another, depending on if you're bullish or bearish, right? So safe to say so far that's accurate. Okay.
And we're just going for dollar wide spreads here.
Dollar wide spreads in you're doing SPY.
I'm doing spies and Qs.
Got it. Okay, spies and Qs. So we're doing dollar wide spreads. So you're selling a dollar iron condor for some value. What do you usually get? 20 cents, 30 cents?
30, 35.
Okay, perfect.
40 on an FOMC day. Although I don't love trading on FOMC days.
Got it. So the idea here is to capture that 35 cents. That's the most you can make. However, on the other side, the most you can lose is 65 cents. The difference between that dollar and 35 cents in our example. Okay. So what can happen is that that spot price can move through one of the sides. In our example we're talking about now, it moves through the put spread, right? Now, do you ever do anything as it breaches the short strike and do something, or is that not the answer? Is it some other value? Do you say, hey, I'll get out when it's 80 cents and start managing the other side, roll it down, do something? Do you see what I'm getting at? I just want to make sure it's
absolutely clear. Great question. And actually, that's what I was going to say is that that's one of the interesting features, because I know you're a Condor trader too. Yeah. You trade a little bit wider. The dollar feature, something that's interesting, and I am coming to like about that, is that it's relatively binary, right? Like 10 SPU points happens like this these days, right? Yep. It doesn't feel like you land in between that much. You're usually through. Like if we have one of a downdraft day or an updraft day, right? Like it feels like you blow through those pretty quickly. That I'm spending with this dollar strike, you're spending a lot less time in that middle gray area.
Yeah.
But your point still is true about even if I'm through and it's early in the day, that you could be $2 or $3 through on a dollar spread, and that dollar spread still only trading 80 cents if there's time on the clock.
Right. And then okay, so that all makes sense. And I think we're pretty clear here now. I hope some of the beginner folks understand that. What do you do when it's trading 80 cents? So you already said it, but let's go back and make sure it's clear. So
I think this gets into an amazing synthetic point, right?
Yep.
If you buy a put spread, what are you doing on the call side?
You are selling the call side.
So do you want to sell that call spread at 20 cents? You're buying that put spread for 80 cents. Yeah. Do you want to sell that call spread? Like I like that market framing, right?
I got you.
We're down 50, 60 points. Am I selling that call spread on us rallying back 40 points today?
But then all that does, though, if you do that, is that you're into a box now.
Correct. I wouldn't actually sell the call spread. I'm just saying, but like in my decision to close, I think about it as selling. I think framing it as selling the call.
Understood.
Is a helpful paradigm.
Got it. Hey, Jason, sorry, I'm not talking to you.
It's all right.
You do a lot of talking.
Both mentally and
this visually. Isn't in your wheelhouse today, maybe, or you could speak up.
No, actually, I mean, I'll tell you this. If I were to trade zero DTE stuff, I would absolutely use a bot. I would probably have like a bunch of different strategies and kind of have them lined up based on where I see, support, resistance, or whatever in Volland. So where I see like the gamma hedging would intensify, and
Mhm.
I would try to structure it around that. But I mean, overall, I don't do much zero DTE trading, mainly because, I'm doing a lot of other things during
Sure.
the day. So I mean,
Yeah.
I
Which
don't
is why you
do
need a
that
bot to
that
do
much,
it.
but
You're
yeah, I do.
You
But I
could-
can't be naive. Like, I never feel good about that naive thing. When I first started doing options, there was like this class of option traders called like the income traders, which were basically stay short gamma all the time, and if like your short strike breaches, adjust, right?
Right.
And I found that a lot of times that like one size fits all never really works. Like, it doesn't make me feel comfortable. Or it
I think I agree with that. But here's the problem. Let me interrupt. Sorry. The problem I have with the one size fits all thing is, I agree with you. You can't do the same thing over and over again and expect it to work, because even if it does work mostly, and people say you have to have a few different strategies, you have to be a chameleon. I feel bad about that, because I want to have one or two things I do really well, and that's it. That works. And just know when to do it. And if the setup isn't there, then I'm not trading that day, or maybe that week, or maybe that month. I don't know. But I kind of want to believe that I can find something that I can just rinse and repeat. I'm totally wrong. I know. But
I would too, except I just don't believe that exists as much.
I know.
Because then the time comes where you don't do it and you wish you did, or you do it and you wish you didn't.
Right.
And so then it becomes like, what are my parameters here?
Mm-hmm.
I'll take sort of inspiration from like the style of market making that I came from, right? That like we were manual market makers in the sense that each trader had their own portfolio. They were moving their individual skew curves. They were click trading to buy and sell different lots. They were verbally interacting with high touch order flow. But even the way we were interacting with stuff electronically, there was a semi-automatic kind of dynamic to the whole thing. That like your skew curve wasn't automatically adjusting and interpolating every second of what the SPX was doing. You would look at order flow and nudge it this way or nudge it that way. And then everything that happened down the line was all automated. All your responses to auction mechanisms, all your quote adjustments, all your size adjustments, all of those permutations, that's all bottable. But where you need that sort of special touch is turning it on and off, saying no to this order, doing more of that order. Saying, okay, I've got my automated system that's going to, close these for a nickel, but things don't look too good. I'm paying 80 cents right now.
Right.
You let the bots do the heavy lifting. Jason can go do his day job. And then when the other things need to happen in between, you make those manual adjustments and you put the spin on the ball, or don't show up to play at all if it's FOMC day or whatever it might be.
Right. I got it. I like it. But you're also looking at implied volatility too. There's got to be an optimum value for that iron condor that at a certain implied volatility is always about 35 cents. So if all of a sudden the price of your typical iron condor is now 15 cents, implied volatility is all of a sudden pretty low, most likely, and you don't want to be selling low implied volatility, maybe, right?
When it's low, it's not low enough.
Yeah, I know. I get that. Maybe the answer is, just keep selling it, baby, and managing the inventory. Let the bot manage the inventory.
I'm a little biased towards the systematics because there absolutely has to be manual spin on the ball. Like that is what my job is as an advisor, right? But like I think you really have to be consistent more often than you think. To Jason's point about you regret it either way if you make an adjustment or did do, should have done, whatever. If it's 20 cents on that dollar condor, you're probably winning more than 4 out of 5 times still.
Mm-hmm.
And I would argue that when it's 40 cents, you're winning less than whatever the odds are.
Yeah, makes sense.
2 to 1.
So can you tell us a little bit about how you set these up, Mark, or how you have the bot set these up? Or is that giving away secret sauce, sort of?
So specifically with the zero DTE stuff, just focusing on the Iron Condor. There's a whole suite of bots, by the way, that I'm working with, but just focusing on the Iron Condor, because I think that might be my personal favorite, is the setup is, so it's not exactly zero DTE. It's closer to like 1 DTE, that at noon today.
Yep.
I'll go out and I'll sell tomorrow's expiring option.
So you take so just so we're all clear, you're taking overnight risk potentially. Or
Correct. It is an overnight.
Yes, you are taking overnight risk, not potentially, actually.
Yeah.
Yep.
Okay. Now, just so the folks know, one of the
Tradier
reasons
knows about my overnight risk. Yes.
Yeah. Okay, that's fine. One of the reasons that the folks should know about is that when you do it like that, you avoid the pattern day trading rule. What does that mean? Pattern day trading says that if you have less than $25,000 in your account, you cannot open and close consecutively 4 trades in a consecutive 4-day period. So the 4th trade is a bad one, right? You can do up to 3, I believe, and then after that, you get whacked in the side of the head, and you go to the principal's office, and you could get tagged as a pattern day trader. Just so we're clear, too, okay? It is the world's dumbest effing rule I've ever heard of in my life. It only hurts the little guy, okay? I'm just going to say that straight out.
Yes, there's a lot of competition, even in the option space.
Guess what? Futures doesn't have.
I agree with you that it is the single dumbest.
Well, and Jason, I'll get to you in a second, but part of my problem is this. I'm trying to prove to some of our community that you can do this with less than 25,000. So I put like 5,000 to an account, and I'm trying to do the same strategy. And what I do is boxes, just like we talked about. So I do the other side, and I get hit on exercise assignment fees, so it eats into my cost. And I'm sitting there thinking to myself, I got a profit in this. I'm a small trader. I'm winning. I won. Hooray! Pat me on the back. The government's not letting me get out of my trade, but the guys with all the money can get out. And I sound like a real liberal right now, and I'm really not. But this is crazy. It's insanity, right? I'm thinking to myself, why? It's like trying to regulate how much sugar you can drink from the 7-Eleven. It's just I just boggle my head. I go, I got a profit, and every little guy out there is saying, what the hell? I can't get out of this. I can't win with the big guys. You guys agree with that or not? I mean, it seems logical.
Meanwhile, they let people buy these like garbage income ETFs instead of actually trading options themselves. That they pump you in some like nonsense that's charging you 2% to mess up your like covered calls, and you can't do it yourself because you're too small.
Right. Unbelievable. And nevertheless, I rant. Where were we? Setting these things up, the bots. Okay.
One DTE.
Oh, hold on. I was gonna mention
sorry,
something
Jason.
too.
I was going to you. And when I went on my tirade there.
Well, yes. While you can avoid pattern day trading, and that is a stupid rule, I agree. Overnight risk is also dangerous because unless it's like right next to regular trading hours in the morning, you can't get out of your trade if it goes sideways. So, something happens overnight, a war starts or something like that.
Yeah.
And you have an iron condor or, something good and, the market rallies. You can be violated and you can't get out of your trade.
Right. In the intraday, you're saying.
Outside the regular trading hours.
Oh, I got you. Yeah. Okay. That makes sense. Yeah. So I would say this.
Pay me for that. I love being short that.
Yeah.
Nothing ever happens.
Right. I kind of like the 1 DT, but I gotta be honest though that there is a good argument for entering the day of. Okay. If you can. And you got to use the stupid box, which I hate if you're under 25,000, but you can do that. And I know a group that's doing it very successfully. And I've seen some of the numbers and it's insane. And they've got a mechanism that based on time of day, when you get in, they have a whole trade plan of when to get out. And they have been killing it with 0 DTE. That's all they trade. Killing. I mean, you're not even going to believe the numbers that these people, and they're doing, I would say the biggest ones are like 10 lots in SPX. So, we'll talk about it another time. I don't want to give away secrets for them, but
they're fantastic for that because there's so much wiggle in these options. Like we've talked about that before, like how much the Greeks just slam around. Ultimately, the prices slam around too, which is great for bots and automatic systematic capture.
Right.
It's perfect playground for it.
Does your bot have a trade plan that gets you out before a nickel, or is that just the answer? It's a nickel in SPY, which would be
the bot is the backstop. I am the trade plan outside of that.
Okay,
so I have some indicators set up that are basically like, hey, intraday, check this at 10, check this at 12.
Got it.
And
yeah. So I would say this: if people who are watching are trying this strategy and struggling a little bit, I think an important takeaway is. And I learned this the other day, and I've been in this business so freaking long. Someone told me that their trade plan they decide their exit before they even enter the trade. They already know what their exit's going to be. I said, that's kind of brilliant, I think. Never thought of it that way. So for retail folks, unlike what Mark and I did in our past lives, you don't have the ability to shake and bake on a trading floor. Okay. You have to be, you have to have that plan to get you out. And if you say that you're going to get out when your max profit is 50%, okay, do it. I'm not going to argue against it. If it's 20%, do it. I'm not going to argue. But you have to have a consistent plan on the loss side too. You can't say I'm going to get out for 20% and I'm going to lose 100% the other way, right? Probably doesn't make sense. Any thoughts?
No, I think I talked about this before. When somebody, sometimes I had some friends ask me, I just made 500% on Dogecoin. When do I get out? And I'm like,
yesterday.
Well, I said, get out now because you don't have an exit plan. I said, before you enter any trade, you should have an exit plan.
Yeah,
whether it's a stop or a profit taking, threshold, or even if it's something outside of money, which is what I tend to do. Like when, I'll use Volin, but like aggregate Vanna starts spiking or something like that, I'll get out of a short trade, or starts tanking, I'll get out of a long trade, or stuff like that. I mean, I have my own metrics that are outside of profits, and that's kind of when I feel like my return to risk is diminished.
Yeah, no, that's good. Mark, do you do any back testing on these strategies at all, or do you just kind of have your very clean setup and rock it?
I'd say more the latter. I mean, there's only a limited amount of like true back testing that you can do on like this type of strategy. We've only had so many markets with true zero DTE exposure, so many market paradigms. I mean, in a lot of ways, I would say the thesis here is as much structural as it is alpha, if that makes sense. That a lot of this has to do with the existence of the structural premium and decay of options and the way they're going to wiggle on their final days. And so appropriately risk managing around that like premium phenomena, as opposed to saying that, when X happens, Y happens.
Right. Right. Okay. You guys can chat can you guys type in the comments that if someone's asking to share the information about this group, put your Twitter handles out there if you want. I can't remember them. You can see it though.
They're talking about the group. Yeah, they're talking about the group you were talking about.
Oh, I got it. Oh, okay. I can't do that right now. So send me an email, whoever this is. I'm gonna put my email in here too, and I'll send it to you that way. Okay. So I just put lex@tradier.com. That's crazy that I chose lex@tradier.com. But easy to remember. So send me an email. Who's it? Stochasticos, and we'll be happy to. I'll connect you. Don't worry. Okay, good. So Mark, one more question, and Jason, you can pitch in here. I know you will. Why not SPX? Why SPY? And here's my reasoning. I hate having a settlement problem with owning stock or not owning stock or being short stock, number one, with SPY. And I don't have any of those issues with SPX. I get, cash settlement. I get European exercise, yada, yada, yada. Why did you choose SPY? Just wondering. There's probably a good reason.
I think you're right. I think SPX is better. I chose SPY because I think it's more accessible.
Oh, okay. Interesting. Accessible because
just in terms of like notional size.
I gotcha. Okay. Interesting.
But why not use XSP?
Verticals on SPX.
Yeah, I know what his answer to XSP is. It's not as liquid as it could be.
Yep. Well, it's not going to get liquid without you in it.
Come on, Mr. Liquidator.
That is true. It is a virtuous circle.
Yeah. So by the way, here's another reason for the bot world that they don't use SPX. SPX is denominated in nickels. So all options trade in nickels in SPX, and that's a problem for bots. Not a problem technically, but they don't like that. They want to have slivers. They want to be able to do things in pennies. And that's why SPY, QQQ, those types of products, XSP, those are great for them. So that was one of the things I heard from one of our other friends at Tradier, who's a bot business. But I think they're working around it, though. I will say that. Not that they're going to change SPX to pennies, but they're working around the coding to make it into nickels. So anyhow, look for that in the near future. So anything
SPX
else?
having an interim of nickels is also stupid.
That's right. Yeah, probably makes sense. Hey, it's a monopoly. What do you want? You know, it's the only place it trades.
I want pennies.
Can't do it. Not going to happen. I don't think. Anything else, Mark, on these bots? So anything else we need to know about these babies?
Reach out to me if you want to know more.
Oh, MrHarvestedFinancial.com.
Exactly.
And MrAdeumFunds.com.
Yeah, don't reach out to me for bots, but you could reach out to me for other things.
Okay.
For dealer positioning and stuff like that. Reach out to Mark for bots.
Yeah.
Me for dealer positioning.
Okay. And now everyone has my Lex@Tradier.com. Reach out to me for anything.
Yeah, you're going to get spammed.
I don't care. It doesn't matter.
You just doxed yourself.
I get so happy when I get a new email from somebody you can't imagine. Makes me so happy.
I'm going to sign him. I'm going to sign you up with all the local car dealerships now.
I get those too. They go right to junk. Don't worry. All right, we didn't have time to talk about our buying a call, selling a put thing. So let me tee it up for next time. Let's talk about this next week. So what we're going to do is here. I'll set up the question. If you are a technical indicator type person, you look at charts and you're very good at picking direction, okay, and you're not allowed to trade stock to take advantage of that direction, you must trade options. What do you choose as a strategy to take advantage of your tremendous skill of picking direction? Okay, and I will tee up a couple items. You should be asking yourself, how valid is the signal? How big is the signal? Meaning, which, you know, how far it can go? How long will the signal last? What's the duration? You know, maybe an implied volatility question could come into your mind in there as well. So lots of things there. So anything else, guys, that you can think of that might be pertinent?
Well, if you're looking for stock returns and you're not looking for any kind of timing thing, just do a synthetic.
Okay, possible. But we're going to be.
You could do better though with options.
We're going to be real clever about this because synthetics, you know, you got a problem with the naked short put or the naked short call, right? And you're going to have to do a synthetic with a protective put or a synthetic with a protective call, depending on which side you do it, right? So
I mean, yeah.
I mean, my feeling is that I might fall down on just, why don't you just buy a call or buy a put? I might fall there. I mean, I got to think about it.
Yeah. Well, there's a lot of, I would say, honestly, from my perspective, the question is incomplete. You need to know, is it only direction that you know, or is timing what you know?
Well,
you also
that would
know
be my first
implied
question.
Volatility.
Yeah, my first question is always going to be, how long and how far is the signal going to go? You know, is this dollars? Is it a few pennies? You know, if it's a few pennies, I'm selling something. I'm selling premium probably. If it's dollars, I'm going to buy something probably. You know.
Yeah.
So.
I agree.
Okay.
And also the timing issue too. Timing issue is a big deal.
Perfect. All right, gents, have a unbelievable weekend. I would tell you that I'm in Chicagoland and I haven't seen better weather. I thank God for global warming because this is freaking unbelievable here. It is like 70 and sunny every day. Unreal. And all fresh
nicer too.
Yeah, you too? Yeah. This winter's going to be like 72 all year long. It's going to be unreal.
Did you move to Florida?
No, I'm in Chicago. We're warming. Everything's warming, they tell me. That's what they're telling me. So I keep trying to spray aerosol cans all over my house. Kidding. My God, what a jerk.
I don't know what to say to that.
I don't know what to say to that. I have a Tesla. My God, what a weirdo. Anyway, you guys have a good weekend. Anything else, Mark? We're drinking anything good this week?
You know, I'm disappointed you're off the cocktail train. I have a couple new tricks up my sleeve I wanted to share with you.
All right. Well, we'll talk offline. I will start the cocktail tonight. We have like 12 guys golfing today. You know how that's going to end up. That's going to be that's going to be a shit show. Let's just call it what it is.
So good luck on the course and off.
Yeah, I know. The off part's the hard part. I'm pretty good on the course. I'm pretty bad off the course. So. All right, boys, have a good one. We'll see you next time, next Thursday. We'll talk about this technical thing next time, if that's okay.
All right. Sounds good.
Yeah. Have a good one, boys.
Happy trading.
Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.